So fast forward to 2023, when I see that net exports out of China of silver, and incidentally, that exports mainly went to, guess where? London, Switzerland, Hong Kong, and Singapore. And India was somewhere in there, but we know that India has been ramping up its photovoltaic output. So you would expect some of the silver to have gone there. But just notice that the other places, they're all financial centres. I just don't see how Hong Kong and Singapore and, if you like, Switzerland really feature in this sort of electronics and photovoltaic and all the rest of it industries. So this is obviously market related. And I think basically we can say, I think with a fair degree of certainty, that the Chinese are basically running the silver market. So, that leaves us with a question of what's their future policy going to be on this? Now, tariffs obviously come into this a bit, I suppose, but mainly what China has done, I think, is it has accumulated a large stock of silver, which has value. Now, it can take one of two approaches to this. It can say, well, we want to continue to control the price because, we're going to continue to have demand. Or they can say, we've got such a good stockpile of silver, we don't actually care what the price is. So if it goes up, we can say that doesn't it look good for us? But of course, it's more expensive if you like to use, but so what, everybody else is in the same boat. So, they're two completely opposite views that they can take on this. I think that it's becoming more in their interest to protect their stockpile, having effectively fed silver into the markets to suppress the price for the last. We know the Silver Institute says there's been a supply deficit for the last 6 years. Taking the ETF variations out of it, it's a solid 6 years. So, but it's longer than that. So I think that the Chinese probably are going to take the view that they'd rather hold on to their silver stocks rather than just keep on chucking it out in the market to try and suppress the price, which is interesting because if you look at the charts, a breakout from 34 3/4, 35 level, it could shoot up to the moon. And if the Chinese stop supplying the market, if you like, trying to control the market, then this could move really quite quickly. And it's happening at a time when everybody that I know has basically lost patience with silver. They think, oh God, don't talk to me about silver again. Particularly when gold is the real story. That's the one that's really running. So that's basically, I think, where we are.
No, that's really insightful, and I think it jives with everything we're seeing here now. I think you've mentioned the breakout point, probably 35-ish spot. The thing is that we're seeing an asymmetric, imbalanced short position. So you've got now. It's so obvious. We've just been looking at this quite closely. So as we went into quarter end, when there should be really at this point, with about 3 weeks and a bit left for the May silver contract to expire, I reckon it should be about a 13-cent EFP. It's about there, not $1.10, not 84 cents as I just recorded it today, and so what they're doing, it's quite clear, they're desperately trying to stop spot 35 sell ignition to take hold. As you say, it could go to the moon at that point. So, and I think this is what is so interesting. We capture them. They're on the chart, live on the chart. There's no way when it should be 13-ish cents that it should be 80 cents today, $1.10 into the end of the quarter. So therefore, I think you're right. I think that this asymmetric, the ability to cap has been asymmetrically done. And in the meantime, we've got COMEX stocks going up. You've got, and I know you talk a lot about this on your channel. You've got silver in every other FX currency. I mean, Canadian dollar, yen, Aussie, whatever. It's broken out. It's through the roof. So this, to me, means that now I know that our liquidity providers who do have contacts in the places you've just talked about are saying this is arbitrable. We are arbitrary this trade because there is no way that you could have that degree of a short position. Someone has to pay this back. Someone's going to have to pay this back. And we've got 3 weeks to what should be 0 EFP. And it won't be because somebody is on the wrong side of this trade. And I think you're right. I think it's reached the point where someone has to let this go. And I think maybe it is time for the Chinese to say, you know what, we've got enough here. And as you rightly point out, if everyone's paying $50 or whatever the price is, then everyone's in the same boat anyway.
No, I think that's right. And I mean, the other thing which is fascinating, I think you might throw a bit more light on this for everybody. The stand for deliveries. The stand for deliveries in both silver and gold have been absolutely massive. And going to gold for a moment, I mean, there was some incredible figure at the end of March. I mean, yesterday, stand for delivery was, I think I worked it out, 108 tons of gold. I mean, 108 tons of gold. The other thing that's interesting is that at the end of January, when the February contract expired, there was also another very big stand for delivery number, not as big as this one. This one was a record by a country mile. But if you took 2 days together, I mean, we were looking at something like 30,000 contracts. So, these are huge amounts. And every day, you get more and more stand for deliveries coming through. Now, the question really is, are these actually delivered? I mean, we know that, it doesn't necessarily leave the COMEX vaults, but it seems to me, I mean, there was a guy called Rafi Farber who, is very much if you like, a gold bug, but an investigative one and a very, very good one. And he decided some time ago to stand for delivery on a contract, on a futures contract. And he chronicled the difficulties he had in the whole process. And, if that is being repeated today, then there is a huge, huge backlog of stands for delivery, which would explain why it is that with the potential threat of tariffs, if you like, on imported gold, everybody in COMEX is trying to grab all the liquidity from around the world that they can come across, because there are unsatisfied stands for deliveries.